Hey everyone, welcome back for another deep dive. Today we're going to be talking about trading psychology,
Okay.
specifically what it takes to be a consistently successful trader.
Right.
And we're going to be looking at this through the lens of Mark Douglas's book,
Okay.
The Disciplined Trader, Developing Winning Attitudes. Have you heard of this one?
Oh, yeah. It's a classic for a reason.
Yeah.
Douglas really gets to the heart of, why so many people struggle in trading.
Yeah.
And it really all comes down to mindset.
Yeah, and I think a lot of people when they first come to trading, like myself included, and I'm not a trader by any means,
Hmm.
but when you first think about it, it seems deceptively simple.
Sure.
You just sit at your computer, you click some buttons,
Right.
and boom,
Yeah.
instant riches.
Right. It seems that way, and that's part of the allure, but it's also a dangerous misconception.
Yeah.
And Douglas actually argues that this illusion of ease is what sets most aspiring traders up for failure.
So you're saying it's more than just, not understanding the markets. It's about our own psychology working against us.
Exactly. The gap between our expectations, that quick and easy money,
Yeah.
and the reality of trading can be brutal.
Yeah.
And Douglas doesn't mince words. He calls it psychological damage.
Wow. So when you say psychological damage, what does that actually look like for somebody who's trying to trade?
It's that, erosion of confidence.
Okay.
That cycle of frustration that builds when you just keep hitting a wall. You
Okay.
come in with these ingrained beliefs about effort and reward.
Yeah.
Work hard, get paid.
Yeah.
Trading doesn't follow those rules.
Right. It's kind of like, well, isn't trading just gambling?
Right.
Where it's like sometimes you win big, sometimes you lose big.
That's a common thought. And trading certainly feels like gambling at times.
Yeah.
But there's a crucial distinction.
Okay.
In gambling, you place your bet and you wait.
Right.
But in trading, you're actively involved in both entering and exiting a trade.
Oh, that's a really good point. I hadn't thought about it like that. So are you saying you could actually lose more by not taking action?
Absolutely. You can become what Douglas calls a passive loser,
A passive loser.
someone who lets fear or indecision paralyze them,
Yeah.
which actually leads to bigger losses than if they had actively managed the trade.
That's a really good point. And so that kind of highlights how different the mental game is in trading compared to betting on a roulette wheel or something.
Exactly. And this ties into another core idea from Douglas,
Yeah.
which is that the market doesn't care about you.
Out. Kind of harsh,
Yeah.
but probably true.
Yeah.
So you mean the market's not just going to magically align with my hopes and dreams?
Not at all. The market is this vast impersonal force.
Okay.
Trying to bend it to your will is like trying to shout down a hurricane.
Right.
What we can do is learn to flow with the market's movements.
Okay. I like that analogy, flow with the market's movements.
Yeah.
What would that look like in practice?
Imagine a surfer riding a wave.
Okay.
They're not fighting the water, they're moving with it, using its power to their advantage. Right.
Trading is similar.
Okay.
You observe the market, you read the signals, and you adjust your actions based on its flow.
So it's more about responsiveness than like forcing a specific outcome.
Exactly.
Yeah.
It's about reading the currents and responding accordingly.
Yeah.
And that's where self-discipline comes in.
Okay.
This is something that Douglas is very adamant about.
Yeah.
He says that without self-discipline, you're sunk.
Yeah, because if you just let your emotions run wild, you're probably going to make impulsive decisions.
Precisely. You need that internal structure.
Yeah.
That set of rules that you follow consistently to navigate a market that inherently lacks structure.
Right.
Otherwise, you're at the mercy of fear, greed, and all those other emotions that can just totally derail your trading.
This reminds me of a time I had invested in a stock and it was going down and I panicked and I sold it way too early.
Yeah.
And then of course it skyrocketed afterwards.
Right. That's a perfect example of how fear can lead to bad decisions.
Yeah. And Douglas actually argues that fear is perhaps the biggest psychological barrier to trading success.
And yeah, the fear of losing money is pretty primal.
Right.
But what other fears are at play when we're talking about trading?
The fear of being wrong, the fear of missing out, the fear of looking foolish.
Yeah.
All of these fears can narrow our focus,
Okay.
preventing us from seeing the bigger picture, the crucial information that the market is offering.
Yeah. It's like putting those blinders on a horse so it can only see straight ahead.
Exactly. Fear acts like blinders.
Yeah.
And overcoming that fear is essential for both spotting opportunities
Right.
and having the confidence to act on them.
Yeah, this is all incredibly insightful. But I'm wondering, where does this concept of the mental environment fit into all this?
Right.
Because Douglas talks a lot about the mental environment, right?
He does. And it's crucial to understanding how we function as traders.
Okay.
The mental environment is essentially the filter through which we perceive the world, including the market.
So it's more than just our thoughts.
Right.
It's about our beliefs, our
Sure.
memories,
Yeah.
maybe even our dreams.
Exactly. All of those things exist as forms of energy, Douglas argues,
Okay.
and they directly influence our behavior.
Okay.
So our beliefs about the market, whether they're conscious or unconscious,
Right.
shape how we interpret information and make trading decisions.
So it's almost like we create our own reality based on what we already believe.
That's a powerful way to put it.
Yeah.
And Douglas actually illustrates this concept beautifully with an anecdote about a free money experiment.
Free money.
Yeah.
I'm intrigued.
I'm listening. So picture this. A man sets up a table on a busy street corner
Okay.
with a sign that clearly says free money,
Okay.
and he has stacks of cash,
Wow.
literally offering it to anyone who will take it.
I mean, I would stop by.
You'd think so, right?
Yeah.
But the surprising thing is most people simply ignored him
Oh.
or treating him like he was crazy.
Wow.
They couldn't grasp the concept of free money. That's so wild. Why would anybody pass up free money?
Because their belief systems were so ingrained
Wow.
that they couldn't even perceive the opportunity.
Yeah.
Their minds had already decided that free money was impossible.
That's such a powerful example of how, our beliefs can limit us even when something beneficial is right in front of us.
Exactly.
Mm.
And in trading, those limiting beliefs can blind us to opportunities
Yeah.
or cause us to misinterpret market signals.
Yeah. So if our mental environment is like cluttered with negativity or self-doubt, it's going to affect our trading decisions.
Absolutely. It's like trying to drive a car with a cracked windshield.
Uh-huh.
Your vision is distorted and it's harder to make good decisions.
So this makes me wonder, how do we start to change those limiting beliefs and create a more supportive mental environment for trading?
That's a great question.
Yeah.
And it leads us to the heart of what Douglas emphasizes,
Okay.
the importance of learning and adapting.
Okay.
But I think that's a perfect place to pause for now. All right, well, we'll pick this up right after the break with part 2.
Sounds good.
Stay with us.
Yeah.
Okay, so before the break, we were talking about those deeply ingrained beliefs
Right.
that can really sabotage our trading.
Yeah.
And you were about to tell us how we can start to shift those beliefs
Mm.
and embrace a more adaptive mindset.
Yeah, it's crucial because the market's like a river.
Okay.
It's constantly changing, always flowing,
Right.
and what worked yesterday might not work today.
Right.
Douglas says that a lot of the stress we experience in trading comes from resisting this flow,
Okay.
clinging to beliefs that are no longer serving us.
Yeah, that makes sense. Because if you're trying to force a specific outcome, you're probably going to get swept away.
Exactly.
But how do we become more adaptable?
It starts with awareness,
Okay.
recognizing when a belief is holding you back.
Okay.
So, for example, let's say you have a belief that every trade has to be a winner.
Okay.
That's incredibly limiting.
Right. Because it sets you up for disappointment. Because losing trades are inevitable.
Exactly.
And if you're terrified of losing, you're probably not even going to enter a trade.
Exactly. So you might start by questioning that belief.
Okay.
Is it really true that every trade has to be a winner?
Right.
What if you reframed it as, I only need a certain percentage of winning trades to be profitable?
Right. That's a much more realistic perspective and probably a lot more empowering.
Exactly.
But even if you shift your beliefs, trading is still incredibly challenging. Right?
Absolutely. There are so many factors at play, and, managing risk is paramount.
Okay, so let's talk about some of the practical things.
Yeah.
What are some concrete steps that we can take to become more disciplined traders?
Well, Douglas outlines several key steps.
Okay.
The first one is developing unshakable self-trust.
Self-trust.
Yeah, and that trust is built through consistent rule following.
Okay. But wouldn't sticking to the rules too rigidly make you miss unexpected opportunities?
Right.
Sometimes you need to
Hold
be
on.
flexible in trading.
That's a great point. It's not about blind rule following.
Right.
It's about having a framework
Right.
that guides your decisions and helps you avoid those emotional impulses.
Yeah.
And yes, sometimes you need to adapt.
Right.
But those adaptations should still align with your overall strategy.
So it's more about having a set of principles
Right.
that you apply thoughtfully rather than just a rigid set of rules that you follow no matter what.
Exactly. It's like learning to play jazz.
Oh.
You need to understand the basic scales and chords, but then you can improvise and express yourself within that framework.
Yeah, I like that analogy.
Yeah.
So how do we go about creating that framework, that trading plan in the first place?
It starts with understanding yourself.
Okay.
What's your risk tolerance?
Right.
What are your financial goals?
Okay.
What kind of trading style suits your personality?
So I imagine that involves a lot of like self-reflection
Right.
and honesty.
Exactly.
It's not just about copying somebody else's strategy.
Right. It's about creating a personalized plan that reflects your individual needs and goals.
Okay.
And once you have that plan, the key is to follow it consistently.
Okay. That brings us to another crucial point that Douglas emphasizes,
Yeah.
and it's the importance of predefining and cutting your losses.
Yeah.
This is something that I think a lot of traders struggle with.
They do.
Why is it so difficult?
Because it goes against our natural instincts.
Okay.
We hate to admit we're wrong, especially when it involves losing money.
Yeah?
It's much easier to just hold on to a losing trade, hoping it'll turn around.
Right. And I've definitely been there. It's like that feeling of if I just hold on a little longer,
Yeah,
it's going to come back.
right.
But often it doesn't.
Often it doesn't, and those small losses can turn into devastating ones.
So how do we overcome that emotional resistance to cutting losses?
Right.
It feels like you almost need superhuman levels of discipline.
It does take discipline, but it's more about having a system in place.
Okay.
Douglas recommends setting stop-loss orders.
Stop-loss order.
It's essentially an automated instruction that exits the trade when it hits a certain level of loss.
Oh, so you're taking the emotion out of it.
Right.
It's not about you having to make that difficult decision in the heat of the moment.
Exactly. It's like having an emergency brake in your car.
Okay.
You hope you never have to use it, but it's there to protect you.
Right. That's a good point. It's about protecting yourself from those worst-case scenarios.
Exactly.
But setting those stop-loss orders, I imagine, can be kind of tricky.
It is. It requires a balance.
Okay.
You don't want to set them too tight,
Right.
where normal market fluctuations trigger them prematurely.
Right.
But you also don't want to set them too loose, where you risk significant losses.
So it sounds like there's a lot of fine-tuning involved and probably some trial and error.
Absolutely.
Okay.
And this is where focusing on a single market can be beneficial,
Okay. Why is focusing on one market so important?
because it allows you to become an expert in that specific market's nuances. You start to understand its rhythm, its patterns, the psychological forces driving its movements.
It's like becoming fluent in a language.
Exactly.
You wouldn't expect to master French, Spanish, and Italian all at the same time.
Exactly. By specializing, you develop a deeper understanding, which can give you an edge.
I'm starting to see how all these pieces fit together.
Right.
Like the self-awareness,
Yeah.
the rule following, the focus on one market.
Yeah.
They all contribute to like a more disciplined and hopefully more successful approach to trading.
Right. It's not just about having a brilliant strategy. It's about executing that strategy consistently.
Right.
And that's where mastering flawless execution comes in.
Okay, let's dive into that. What does flawless execution mean in the context of trading?
It means being able to enter and exit trades with precision without hesitation or second guessing.
Wow.
It's about aligning your actions with your analysis and your trading plan.
That sounds incredibly challenging, especially in a fast-moving market where emotions are running high.
It requires a high level of self-awareness and mental discipline.
So how do we develop that mental muscle?
Yeah.
That ability to execute flawlessly under pressure?
Practice is key.
Okay.
Douglas recommends practicing your execution skills outside of live trading,
Okay.
using simulations or paper trading.
So it's like a pilot practicing in a flight simulator before taking to the skies.
Exactly. By simulating real-world trading scenarios, you're building that muscle memory,
Yeah.
that mental discipline, and the confidence to act decisively when it matters.
And this all ties back to something we talked about earlier.
Right.
The ability to think in probabilities.
It does. All of these disciplines, the rule following, the loss cutting, the focus on one market, the mastery of execution,
Yeah.
they all contribute to your ability to detach from emotional impulses
Right.
and make decisions based on a probabilistic view of the market.
So it sounds like Douglas is advocating for a very objective, almost scientific approach to trading.
That's a good way to put it.
Yeah.
It's about letting go of the need to be right all the time. Okay.
And accepting that uncertainty is inherent in trading.
But how do we reconcile that acceptance of uncertainty with the desire to be successful?
Yeah.
It seems almost paradoxical.
That's a great question, and it's something we'll explore in more detail in the next part.
Okay, I'm already intrigued. So we've been talking about this idea of accepting uncertainty in trading, and I'm curious how that fits with actually wanting to succeed as a trader.
Yeah, this is actually a key point that Douglas stresses. Successful traders, they don't need to predict the future with certainty.
Okay.
Instead, they focus on probabilities.
Okay.
They recognize that Every trade has the potential for both profit and loss, and they make decisions accordingly.
So instead of saying, like, this stock is definitely going up, a disciplined trader would be more likely to say something like, based on my analysis, there's a higher probability of the stock going up than down.
Precisely. They shift their focus from trying to be right all the time
Right.
to identifying which outcome is more likely.
Yeah.
It's a subtle but powerful shift in mindset. Yeah, I can imagine that takes a lot of the pressure off.
Yeah.
If you're not, like, attached to a specific outcome,
Right.
you're less likely to be, like, emotionally devastated when a trade goes against you.
Exactly. And that emotional detachment allows you to make more rational decisions.
Okay.
Douglas actually calls this approach thinking in probabilities.
Okay.
And it's really one of the cornerstones of his philosophy.
So how do we actually put that into practice?
Yeah.
How does a trader go about determining those probabilities?
It involves a combination of analysis, observation, and experience.
Okay.
You're looking for clues, patterns, and signals in the market that suggest that one outcome is more likely than another.
So it's not just about, like, crunching numbers
Right.
or relying on technical indicators. There's an element of intuition involved as well.
Absolutely. It's about developing a feel for the market, a sense of its rhythm and flow.
Okay.
Douglas talks about identifying the dominant force in the market.
The dominant force.
Yeah, the group of traders who are currently driving the price action.
Okay, so it's like recognizing who's winning the tug of war between buyers and sellers.
Exactly.
But how do you figure out who has the upper hand?
It's a process of reading the market's language. You know, the price movements, the volume, the momentum.
Right.
You're looking for signs of strength or weakness, clues that suggest which group has more conviction behind their actions.
It's like a detective, piecing together clues to solve a mystery.
Yeah,
Except in this case, the mystery is which way the market's going to move next.
that's a great analogy. And just like a detective, a skilled trader develops a keen eye for detail,
Yeah.
noticing those subtle shifts in sentiment that others might miss.
But isn't there a risk of, like, overthinking things, getting lost in the data? Sometimes the simplest explanation is the best one.
That's true.
Yeah.
You don't want to get bogged down in analysis paralysis.
Right.
It's about finding that balance between thoughtful observation and decisive action.
So it's not about having all the answers.
Yeah.
It's more about knowing which questions to ask and then trusting your judgment based on the information that's available.
Exactly. And that trust is built through experience,
Okay.
through learning from both your successes and your mistakes.
Which brings us back to that idea of learning and adapting, something we talked about earlier.
Yeah.
It sounds like that's like an ongoing process for a trader.
It is.
You know, always refining their approach, always seeking new insights.
Absolutely. The market is constantly evolving,
Right.
so a trader needs to evolve with it.
Yeah.
And Douglas emphasizes the danger of what he calls demand-backed expectations.
Okay, demand-backed expectation.
Yeah, it's holding on to these rigid beliefs about how the market should behave.
Right. So if you're, like, too attached to a specific outcome, you're more likely to miss opportunities or make bad decisions based on what you want to happen rather than what's actually happening.
Right. It's about letting go of the need to control the market,
Yeah.
accepting that you can only control your own actions and reactions.
So surrendering to the flow, recognizing that the market's going to do what it's going to do regardless of, like, my own personal desires.
Exactly. It's a humbling realization, but it's also incredibly liberating.
Okay.
Once you let go of that need to be right,
Yeah.
you open yourself up to a whole new level of understanding and flexibility.
Well, this has been an incredibly enlightening conversation.
It has.
We've covered so much ground, the psychology of trading, the challenges that we face, and the steps for developing the mental discipline to succeed.
Yeah. It's been a pleasure to share these insights.
Yeah.
And I hope our listeners find them valuable as they continue their own trading journeys.
What final thought would you leave our audience with today?
Remember that trading success is ultimately a reflection of self-mastery.
Okay.
It's not just about mastering strategies or indicators.
Right.
It's about mastering your own mind.
So it's about becoming, like, the best version of yourself as a trader and maybe even as a human being.
Precisely. It's a journey of self-discovery that can be incredibly rewarding, both financially and personally.
That's a great message to end on. Thanks for joining us for this deep dive into trading psychology, and we'll see you next time on The Deep Dive.